Hello, fellow investors. Last time I screened restaurant stocks. This time I'm screening discount stores. If you look at Finviz under discount stores, you'll find these stocks. And so therefore, I'd be screening these stocks, at least from Walmart down to BJ's wholesales. First discount store stock I'm screening is Walmart, WMT. Walmart is a retail corporation that operates chain of hypermarkets, discount department store, and grocery stores. Walmart is ranked 1 in Fortune 500 by total revenues in 2021. What price should we buy the stock? For old returning viewers, this is Walmart's valuation summary. Overvalued. If I were to screen WMT the same with other stocks, then you'd see this. I have fair values of $9, intrinsic value of 80.96. This is from Guru Focus. For the record, I'm not saying Walmart is a $9 stock, okay? What this is simply the same process I use for all other stocks. I look at stocks at eye level. One process for all. No buts, no ifs, no maybes. I learned that for retail stocks, this will always happen. That's why I tried to understand how these stocks trade. And the best metric to use for stocks like this, low margin companies, are price to free cash flow, historical PEs, and the PB ratio. I will be covering these metrics later. Let me just say, this is why I hate holding these kinds of stocks for the long term. I see no point owning them, to be honest. Why not just buy a PG stock, KMB stock, KHC stock, stocks whose product you buy inside the stores? I mean, for every grocery store, there will be a PG product. Why not just buy the stock that this retail sell? For every Walmart, Kroger, and Target, I bet my precious dollar there's a PG product in there. Although the point of this video is not that. I mean, I'd recommend not buying these kinds of stock. But if you really want to own these stocks because these are solid companies to put money in, I too don't think they will ever cease to exist, then sure, I'll help you owning these stocks and I'd give you my best prices for the stock. Walmart is currently trading at $127.51 with market cap of $351.01 billion. PE ratio 27.4. It gives out an annual dividend of $2.24 per share, a yield of 1.76% of the current price. It's now 20.69% of the highs. First metric, we want an EPS multiple lower than 3. It's 5.89. The PE is too high because the EPS is steady at these levels, around 4 5 EPS. EPS is increasing, OSN is decreasing. Good. 198 million shares in 5 years. That's a lot, if you ask me. We've established that second metric is not the right metric for this kinds of stocks, so we're not going to look more into this metric, but their margins play around 1 to 3% margins. Third metric is PE to price to free cash flow. Price to free cash flow is 112. Now this is beyond expensive because the free cash flow trailing 12 months is so low now. If we use 2021 free cash flow, price to free cash flow would look very attractive. I think Walmart tanking is reasonable, really. If you're buying Walmart for the dividends, I'd like to think it's safe. Only 48% payout ratio. Although the metric says don't buy. Fifth metric suggests it's trading at 2 times the average historical PE. These are some important metrics to look at. PB ratio is cheap at 4.09. Maybe it's not as expensive as one would think. I mean, Apple is trading at 30 plus PB ratio. This looks attractive. I want this below 5. Current ratio is low though, 0.86. Long-term debt is too high. You might want to check your debt tolerance. The only metric that would work for Walmart right now is the PB ratio. The price to free cash flow is too high. The fifth metric suggests it's trading 2 times historical PE. Now, here is Walmart's PB ratio history. One from Guru Focus and the other from Market Trends. Historical data suggests that it's always been trading around 2 to 5 PB ratio. And right now, it's trading at a premium, 1.39 times their average PB ratio of 2.95. Take note of these PB ratios: 2.95, 3.41, and 4.55. We'll translate them into prices with respect to the current total equity they put out this most recent quarter. The total equity for the most recent quarter is 85.86 billion. At 5 PB ratio, the price would be $156. Of course, we don't want to buy those prices. If we refer back to the historical PB data, we should be buying WMT at PB ratio around 295 to 341. That's the average PB ratio for 10 to 13 years. 2.95 PB ratio if you're a very conservative investor. 2.95 PB ratio is $92. 3.41 PB ratio is $106. Now, we'll confirm this with their charts to see which price is the most feasible, the most realistic entry price. This is Walmart's charts. 2% dividend yield is $112. 3% dividend yield is $74.67. I don't think we'll ever reach those lows again. This range here is the PB ratio range from 2.95 to 3.41. This is the range I'd recommend buying WMT at prices around $92 to $106. So you might want to start a position at $106. This is long-term entry price already. And to be honest, this is a more realistic entry price than $92 and $75. So yeah, $106 for Walmart, but of course, the total equity and the PB ratio ranges every quarter. So that's the risk because you could be catching a falling knife. But I still see Walmart performing well. I just don't see a world without Walmart anymore. So yeah, that's my take on Walmart stock. $106 for the long term.